since it's an equities and crypto topic, I see a lot of our customers on the InvestorAi equities side here. So it's absolutely lovely to see some of these names. We will begin in about a minute. We can see people just coming in. So let's just give it a minute.
I think we've got one participant who looks to be 6 months old. So you're really catching them young, aren't we?
They don't want to miss out at all, and from a time perspective, Akshay.
Exactly. It is, investment best to start as early as you can.
Yeah, you're spot on, Akshay. I started my kids at 6 months. You don't even do it.
Oh my God. Okay. That's so Anand here. I think the same thing is going to happen. Yeah. Okay. I think people, they're just coming in. We'll keep adding them. But let's get started. So thank you, everyone, and a very good evening and a good afternoon, like I just said earlier, to everyone who's joined us from India and UK. We have a special session today. We have with us Ashwani Mathur, who we fondly like to call Ash, and he's an equity and macro strategist. He's also a really close friend of the company and of the space. We also have with us Akshay Bhargava, our chairman and founder, who all of you have met and is coming back after a few sessions. So today the topic that we're going to talk about on Ready Steady Crypto is actually about equities and crypto. A lot of you wrote into us and actually kept telling us that this is great. I'm very interested in crypto and all this action, but how do I do this together? And how do I look at in my investment strategy in a complete way? So we thought this is the best way to sort of bring Ash and Akshay in, and we're going to have a fireside chat. The chat is going to be open, and we'd love for you to keep putting in your questions. We will take questions at the end, but for now I'm going to hand it over to Akshay, and Akshay is going to have a great chat with Ash. So Akshay, over to you, and welcome everyone.
Thank you so much, Shruti. Welcome to everybody. Really excited to have all of you here, and even more excited to have an illustrious guest with us, Ash Mathur. Ash is somebody who we as a company in Bridgeweave know very well. He's an investor in our company. He's an advisor to us. He, he aggravates us with his suggestions, and some of them are good, some of them are difficult. All of them have value, and he's super involved with us, and that is what we like. And so whenever Ash says something, that's really, we take it very seriously. He's also one of the smartest investors I've met across, not because he makes the most amount of money. I don't know, maybe he does. But it's not really investment performance, but the way he understands investments and the way he is able to explain it. I think that is a skill. And that is why I'm so pleased that he agreed to join us today and talk about his investment experience. So I'm just going to ask him a few questions, and I really request, Ash, that stick to your experience. You don't need to talk about the world. You don't need to tell us about Warren Buffett. Tell us what Ash Mathur does. That is where the learning is for all of us. So with that small introduction, huge welcome to Ash. Really happy to have you here, and thank you for joining us.
Thank you, Akshay.
So Ash, look, this session is about equity and crypto. A lot of people, in fact, all of us here have invested in equities. So one way or the other, we understand how the equity markets work. But crypto, some people understand, some people don't, and it's a bit of a mystery. But more important, forget how the markets work. My biggest question is, why should anyone or you consider crypto as a part of your portfolio? What is it that makes it either compelling or not compelling or whatever? How do you think about it?
No, Akshay, thank you so much for the very warm introduction. Those were some very exorbitant words that I don't think I can live up to, but I will try my best to offer whatever little I can in terms of my personal experience. So to understand how I developed my own thinking on crypto, I'd just like to take you back in history. And just very simply, and I'm sure most of your viewers already know this, that we moved from a gold standard to a fiat currency system in the early 70s. And that fiat currency system has just crept up upon us over the last 50 years. And as we all know, governments and central banks have this uncanny ability to start to misuse their powers. And effectively, they start out with controlling inflation in the 70s under Volcker, and then you try to manage fiscal policy and try to manage monetary policy. And then sooner or later, you realize that you've got some incredible control in your hands. And that is often something that becomes a tool of misuse. Now, why do I say that? The reason I say that is because in my humble experience over the last decade, post the great financial crisis, we never reset the system properly. So we never had we never liquidated the bad assets. We never let the companies that should have gone bust go bust in a true capitalist environment, which is what should have happened. And we unleashed a monetary experiment that has taken us down a path from where I see absolutely no turning back. So this monetary experiment has become an experiment where we're all riding a tiger. Now, most of us don't know this. And we live our life, we go and work from 9 to 5, we've got families, we look after them, but we never think about the larger force that is at work. And that is something that I have thought very deeply about. And my biggest concern, actually, for the rest of my life, and I'm 51 years old, my biggest concern from here on is how is this monetary experiment going to actually unravel in our lives? And I truly worry about potentially a complete regime shift from a fiat currency system to a whole new system. And none of us knew what that alternative to a fiat currency system would look like, because we couldn't think about a world without a US dollar and without sterling and without euros and without a Japanese yen. None of us knew what that world would look like until you had this imaginary or a real figure called Satoshi Nakamoto, who came in 2008 and created this wonderful thing called Bitcoin. And it's taken 10 years, and different people have got onto the adoption curve at various points in time, which is typically what happens. And I have to admit that I was a very late entrant into the crypto world. For the first 5 to 7 years, I was a complete naysayer. I mean, I could just simply not get my head around an alternative to the central banks and towards fiat currency. So I was myself, and I've been a broker to large hedge funds. I've been speaking to institutions all my life. And we literally never, ever spoke about it with any level of seriousness. And then, typically, if you are in the markets and you start to follow stuff, I started to really understand what was going on here. And I still worry about the fiat currency system, but I worry about it less now because I think that the crypto world, especially Bitcoin, is well past its proof of concept. So the fact that I adopted Bitcoin very late in its journey, I missed out the first 1,000,000% of growth in Bitcoin. I adopted Bitcoin about literally 2.5 years ago. And I see that as growing in stature. And I don't see an alternative emerging to Bitcoin because Bitcoin is truly decentralized. And I'm sure your viewers know about that. And I don't think we want to talk about the intricacies of Bitcoin. But I think that up until now, it was very risky to invest in Bitcoin maybe 5 years ago. I think it's risky now to not invest in the crypto market. I think the risk spectrum has shifted. Sorry, I can't hear you, Akshay.
So that's a very interesting view, Ash. So you're saying that earlier it was risky to invest. Now it is risky not to invest.
Yeah, I think the table has turned.
Yeah.
And I think the fact that you're going to get so typically what happens in an adoption curve is that the adoption curve always starts out linearly. So you get very few people, and it's a very slow and steady climb, and kind of only the real, pardon my use of a strong word, only the real jihadis begin to start to, truly talk about it. And then the adoption curve starts to get exponential. And my assessment of the way I've looked at big trends is that we are early on the exponential growth curve.
Okay, that's very interesting, because today I read an article from Cathy Wood from ARK Investments, where she says that, and you can like Cathy Wood or you can not like Cathy Wood. She's a pretty polarizing figure. But she says that in her opinion, Bitcoin will be worth $1 million by end of 2030, which is not far, 8 years. Anyway, so if you're right that it is risky not to invest in Bitcoin, how much would you allocate as a part of your portfolio to cryptocurrencies?
So I can tell you where my allocation resides, and then, so to understand where my allocation in crypto is, I think we need to go a little bit further back on how my allocation on, sort of various asset classes has materialized. So I have to say that till I was 45 years old, I literally wasted my investing career. And I lost, I'd say, my father was in the Indian Army. You grow up in a middle-class Indian background. You never think about investing. You never think about stock markets. So the first 21 years of your life were just a total washout. There was no one in my family who ever owned a single stock. Okay. So that was 21 years lost straight away. Okay. Then it took me 20 years, 25 years to just have failed experiments. I tried to get onto trends, try to follow people, try to follow different ideas, got involved in, trading stuff. I was covering hedge funds all my life. Never, ever thought about investing the way I think about investing now. So my investing journey started at 45. So I would certainly recommend to everybody, it doesn't matter what your age is, but you couldn't have started earlier enough, okay? Because the beauty about compounding, owning great operating assets, and there are superb operating assets across all parts of the world that generate incredible value for you as an individual. And I certainly believe that had I practiced what I practiced for the last 6 years, 25 years ago, I would be financially free by the age of 35. And that financial freedom means that I can play the guitar, I can do yoga, I can travel the world, I can ride on a motorbike, I can climb mountains, I can go and hike, I can write books, I can make music. That is something which can only come through two ways in life. One is if you've got a brilliant idea, you're a superb entrepreneur, you execute, and the market rewards you for innovation. And the second way to do it is that you find people like that who you back, which would be great operating businesses that already exist, or great entrepreneurs who are innovating. So you become wealthy one of those two ways. You will never get wealthy being an employee. Even at Goldman Sachs, you'll never get truly wealthy if you're just an employee.
Yeah. No, that's very interesting. Thank you for that. So today, so you said, you look at crypto in a very different way now than you did earlier. How do you think of equities now?
So yeah, sorry, I didn't answer your question, which was the allocation.
Yeah.
So I'll tell you how my portfolio is allocated. Now, I don't consider my real estate investment my home as part of my allocation, because that I believe is literally the first thing you should always do. And sorry, so first thing is I truly worry about a collapse in the fiat currency system. The second thing that keeps me awake at night is runaway inflation. Okay.
Yeah.
And with runaway inflation, what happens is that if you don't own your home, you can have a very debilitating life. Now, if you cannot get onto the property ladder today, the second best alternative to get onto the property ladder is to immediately get onto the equity ladder.
Yeah.
Because equities will stay or beat real estate, which means that your purchasing power will remain intact. And whenever you are ready to put that lump sum to buy your property, you do that, get that out of the way, and then, sort of come back onto the investing game. So excluding property in your pie chart, which is the roof over your head, my view is that anyone under the age of 50 should only be invested in equities and crypto. And it's a question of how well you understand the risks and how well you understand what Bitcoin and Ethereum and smart contracts and all the other new currencies are all about. My allocation to crypto is now getting closer to 10%.
Okay.
And I've got 90% in equities. This is excluding my real estate. And I don't believe I will ever own real estate as a part of my asset allocation.
Asset allocation.
I don't think real estate is a great asset.
But Ash, even 10% is a big number. The people I speak to talk in terms of 2%, 3%, maybe 5%, So 10% suggests that you're a believer.
So I'll tell you how so I'm a bit kind of fortunate that I'm reasonably connected into the institutional hedge fund VC world. Right. So 5% of my allocation is I own shares in a private vehicle, in a private company, which is the world's largest Bitcoin mining operation. It's called Genesis Digital Assets. I've been invested, and you know about this, Akshay. I think I spoke about it over a dinner with you some time ago, probably about a year and a half ago. So that's going to get listed in the US equity market sometime this year. So 5% of my personal money is in that, and the rest is 2.5% in Bitcoin and 2.5% in Ethereum. And as soon as your products are launched on InvestorAi Crypto, I will shift another 5%. So I'm going to keep my Bitcoin, Ethereum permanent long only position. I'm not going to change that. I'm happy to ride the volatility through it, but I will make a new allocation into your Bitcoin accumulator and into your Alpha Hunter strategy.
Well,
that'll get me to 15%. So then my allocation will be 85-15.
Excellent.
And I still don't own gold. I still don't own any silver. And if I do end up owning any gold and silver, it'll be at the cost of getting my equity position down from 85 to 75.
Got it. Understand. No, that's really useful. Thank you for that. One question that I think will be of interest to everybody on this call. What would be your recommendation or your advice or guidance, whatever you call it, to somebody starting out with a relatively small amount of capital, let's say $5,000?
So that's very interesting. I would have a very strong barbell strategy if I was a young investor today. What do I mean by a barbell strategy? A barbell strategy is that I would allocate 50% of my portfolio into strong growth and strong free cash flow yielding companies using the equity market.
Right.
Okay. But I would go hell for leather with a balanced 50%. And I think there is literally only one asset class that gives you that leverage today as a young investor, and that's the crypto market.
Yeah.
And
so one part will be relatively low risk, safe, cash flow generating investments. And because that is safe, you can then balance that by taking higher risk on the other end, right? So,
yeah. And for the balance, I would have almost 80% of that crypto allocation not outside Bitcoin and Ethereum for now, but that could change very quickly.
Okay. Okay, so now that brings me logically to my last question of today before we open it up for question and answers. And by the way, guys, please keep the questions coming on the chat forum. We will take all of them up after this thing is over. So Ash, you're very familiar with Alpha Hunter strategy and the smart accumulator strategy. What do you think of these two strategies for the benefit of everybody else here who don't have the depth of knowledge that and the familiarity that you do?
So I think the Bitcoin accumulator is literally so for those of you who are technically minded and who care about Sharpe ratios, which is a smooth equity curve with not much volatility. And we all know that Bitcoin, it has been fairly volatile, but if you actually look at a logarithmic chart of Bitcoin going back 10 to 15 years, it's actually compounded at an astounding rate. And when you compound at an astounding rate, you have to take the volatility alongside it. So I think Bitcoin, sorry, your question exactly was where?
What is your view on both the strategies that we are going to offer?
So the Bitcoin accumulator strategy is something which I think is a better risk reward exposure into Bitcoin without having to ride the volatility, but still maintaining the exposure. So you're not suffering big drawdowns when Bitcoin halves, which it could do anytime. Bitcoin could go to 20,000, it could go to 80,000, I don't know. But watching it go down to 20,000 will not be something which a lot of our investors will be willing to pallet. And typically what tends to happen is that when you get great volatility, people actually get out exactly at the wrong time. So rather than get out at the wrong time, why not have a strategy that keeps you invested during the good times and gets you out during the drawdown periods?
So you're saying you like the accumulator strategy?
Oh yeah, look, I'm waiting for it to launch, Akshay.
You didn't talk about the Alpha Hunter. What are your views on that one?
So I think the Alpha Hunter is something that is very, very useful for someone like myself, where I frankly have not stepped outside Bitcoin and Ethereum yet. And I know that I've missed a lot and I don't want to miss it. And one of the ways in which I can catch the next big thing would be through the Alpha Hunter. So I think that both Bitcoin Accumulator as well as Alpha Hunter are great strategies. And I would personally put my own sort of capital behind both of
them. Thank you. Thank you so much, Ash. This is very interesting because you not only have given us some pointers of how you as a professional investor think about asset allocation, asset classes, but you've actually given us the greatest confidence by, putting your money where your mouth is, by actually saying I will make the investment rather than simply saying it's a good investment. So that's something we really appreciate. And,
like I said, I truly believe that there are three things to think about. One, you got to worry about inflation.
Right.
You got to worry about the fiat currency system. And I think you've got to be really worried if you don't have exposure to this asset class. So I think it is riskier now to be not invested as opposed to being invested. Because the exponential curve could be right in front of us.
Yeah. No, that's very true. And I had frankly never thought of it that way. And Shruti, it gives you a great slogan. You can't afford not to use InvestorAi Crypto.
In fact, we have a question and I want to get into that question, Akshay. Straight into that one. Abhijit asks us, and Akshay, I hope, that was your last question because we've got a lot of questions coming in.
Yeah. So please, over to you. Now, you feel free to direct the question either to Ash or me, or, one of us will pick it up.
Sure. So this one, Akshay, is coming to you to start with because this is something you should answer. So Abhijit asks us, which crypto platform and trading app is best? Sorry, 1 second. Yeah, is best as far as the Indian regulations are concerned to be used in INR. I think he's talking about the exchange as well.
Okay. Look, this is a very, very, very good question. But it is not easy to answer at all because things in India are changing literally by the day. So Abhijit, I can't really answer that because if you'd asked me 2 weeks ago, I would have said something. 1 week ago, I would have said something else. Today, I think the things are changing so rapidly. So you all know that none of the big banks are now permitting INR into crypto wallet. So HDFC, Axis, Kotak, ICICI, SBI, they all said no. So I don't know what small banks are doing. Maybe if you go to Lakshmi Vilas Bank, they will allow you to do it, or Ratnakar Bank or something like that. So getting INR and UPI has also now stopped. So earlier you could go to MobiKwik and use UPI. Even that is not permitted. So I don't know what is the easiest way to think. I may ask Sarthak, our colleague, to come in and talk a little bit about it. I think Sarthak is on this call. But one of the ways which I'm told, I have not used it myself, but I am told is very effective and relatively safe. I have not used it because I don't think it's safe, but apparently it is not that risky, is the P2P transfer. So you transfer INR to some individual, and that individual is holding Bitcoin and he will transfer Bitcoin into your wallet. Yeah, I can't bring myself to trust individuals with large amounts of money. So I'm a little skeptical, but I'm told that is a way. I think this is a very changing situation, Abhijit. So you have to keep track of which which platform is allowing you to move INR into crypto. The big ones are WazirX, Coin Switch, and Coin DCX. Coin DCX just raised a huge amount of money recently. So these are the three big ones, but there are others as well. I won't come out and say which one is best because I think the situation is very fluid and very fast changing.
Okay, Akshay, I think that was a good way to answer that one. But we will stay in touch, and we're on the community, and the links are up. So as and when you have questions like this, do ask us, and as things change, like Akshay said, but we will. As a company, and of course, along with the community, give you these answers. Ash, there's one for you. This is from Amit, and he asks, don't you think that the label of volatility to any equity or crypto is dependent on the time frame under consideration? Over certain short periods, I do not think that crypto, and he means BTC in particular, is volatile. Very few daily candlesticks are so big to qualify as volatile. He wants
that's a very, very critical component of investing. Every investor must know their time frame. And my time frame for my equity allocation is forever. So I don't trade my equity portfolio, on a regular basis. So I don't really care about the volatility of my equity investments because that's how I think about investing over the long term. In terms of investing in Bitcoin and Ethereum, I already said earlier that I've taken a permanent view on Bitcoin and Ethereum. I want to be long for the next decade. The third thing which I do worry about is any new allocation I want to have in Bitcoin and Ethereum has to come with controlled volatility. So it needs to be a high Sharpe ratio. And that's why I'm super attracted to this product that Akshay and you and the team have put together, where at least I feel that over time, I won't have to take the drawdowns for an additional allocation into the markets. So the fact that the algos, and I don't know what they will effectively end up looking like, because that may change. But at the moment, my understanding is that these are short-term algos. So okay. I don't really care about the volatility on any time frame because I've already decided what my longer-term time frame is, which is the next decade. I'm not touching it. And then my shorter-term time frame, I don't really care because I'm handing it over to you guys.
And speaking of that, Akshay, Shahbaz actually has a question directly in connection to what Ash just said. So he says, how much money should we invest in Bitcoin Accumulator or Alpha Hunter for optimal result according to you?
So Shaba is a very good question. But what is optimal result depends on you. You know what you're after. The hunter strategy will tend to do better in bull markets. The accumulator strategy will tend to do better in bear markets. Okay, it is not that it is useless in other market conditions, but it will tend to do little bit better. Even within hunter, there are two variants which look very small. You will see two variants which will look very small, but they have a profound difference. When you set up the hunter strategy, you will be faced with a choice whether to set profit limits or stop loss targets, or whether to set no limits at all. Okay. Now, no limits means it's a much more volatile experience for the 5 hours or 6 hours that the trading cycle is open for. With a stop loss and a profit limit, and volatility gets reduced. But the problem is you don't know which one will come first. If stop loss comes first, then you'll be out and you'll crystallize your losses. If you set too small a stop loss, say 1%, and crypto can go 1% in a minute, So there are some of these things to think about. I'll tell you what I'm going to do, and this is not necessarily what you should do. I'm going to put 1/3, 1/3, 1/3, 1/3 in accumulator, 1/3 in hunter with stop loss and profit target, and 1/3 in hunter with no stop loss and no profit target. I'm going to watch it for maybe 1 or 2 months. Then I will decide how I want to rebalance between these three approaches. So, look, try a little bit of everything. Let it run for a while. Don't make a decision in 2 days or 3 days. The problem is that we are in the app, we are showing you real-time information. So, literally the temptation is to look at it every 2 minutes. But if you look at it every 2 minutes, 3 hours will become very long periods. And you'll make, major decisions based on extremely short time frames. So my suggestion is look at it as often as you want, but let it run for a period of time. And then make a decision as to how you're thinking about it.
Okay. And since you're speaking about the app, Akshay, there's a question that's come in about what all our app can do. And Ulas asks us if our InvestorAi Crypto app will suggest NFT ideas for investing.
Ulas, no. We will not suggest NFT at this moment. I would say that in the hunter strategy, we cover 30 currencies, cryptocurrencies. Why 30? Based on a number of criteria, we have judgmentally whitelisted 30 currencies. The criteria is liquidity, longevity, volatility, and some of those things. So there are about 30 currencies. In accumulator, it is only Bitcoin and Ether, only 2 currencies. Okay, that is all. Now, for now, over time, we have a very exciting project we are working on with respect to NFTs and those kind of things, but that is in the works. Abhi nahi aayega. It'll take time. There is an answer from Manav. This is in response to a question which app or which platform you can use. He's suggesting WazirX and CoinDCX, and he uses WazirX. He's also saying, I do Binance P2P as they have the best quality and low fees. I agree with that. Binance has the best functionality and the lowest fees. So I would really encourage people to use Binance. But this is a good experience, I think. Thank you, Madhav. Thanks for sharing.
And we have a referral link that you could use to open a Binance account if you don't have one. And that link is gone up once, but we're going to have it up on the chat again. Ash, I'm just going to come back with a question and a comment actually that Manav had, but just before we get to that one, Akshay, if you could just clarify one more thing on our app. Hardik asks us, will the app help in automating the crypto taxes too?
Hardik, I'm sorry, it won't. See, remember, it's actually a point of principle more than anything else. Just remember, your account is with WazirX or CoinDCX or Binance, wherever it is. That is where all your money sits. It's like a brokerage account. If you have an account with Zerodha or Paytm Money, all your shares are in Zerodha or Paytm Money. Okay, and all your brokerage transactions, what money came, what money went, how much money you made, etc. Everything is recorded in your exchange. We are an overlay. So if you're familiar with small case, we are like small case. We don't control your money. We don't control your shares. Your shares continue to sit wherever they sit. Small case just gives you portfolios that you can execute using your brokerage account. We are exactly like that. We give you ideas, we give you strategies that you can execute in your brokerage account. So the ultimate books of account for you are your brokerage account. And that is where all the tax information has to be given, because when you go to file your IT return, if you print out a statement from our app, that is not any good. You have to print out the statement from your exchange account. That is why we don't get involved with any of the tax deductions and things.
Okay. Ash, this one's for you from Manav. Slightly long. How do you make sure equities you invest in are not inflated? If you get 10% return on equities overall, let's say inflation is 7%, that makes you just 3%. Then you also pay taxes. So that 3% comes down to 1 to 2%, depending upon where you live. Keeping that in mind, what return do you consider good for the financial freedom part that you spoke about?
So that's an interesting question, Manav, because in my lifetime, I started in the industry in 1992. From 1992 till now, there has been no inflation. So we've been living in a low inflationary environment. So which is why I'm really concerned, because most people don't know what inflation looks like. Because I was a little kid when inflation happened in the 70s. And I don't want to ask Akshay if he saw that inflation, because that will tell us a little bit about when he started. But
I will not say anything. I was also a kid.
Yeah, but the 70s inflation was extremely punitive for asset markets. The 20s Weimar inflation was devastating for Germany. We know what inflation has done to Zimbabwe and Venezuela. So is my fear going to play out? Are we going to go into a high inflationary environment? I'd say the probabilities are higher than they've ever been in my lifetime. What equities will do with that underlying inflation, I think it's a tricky answer, Manav. But my guess would be that there will be certain parts of the market which are real asset exposed companies. And in that, I include steel companies, industrials, mining companies, companies that are true brick and mortar companies. I think they will keep pace with inflation. And if you actually look at the real return of the S&P 500 over the last 100 years, the real return of the S&P 500 has been somewhere between 10 to 11% annualized over 100 years. I think the S&P 500 will give you that real return in your lifetime, Mark.
Yeah.
If we go into a runaway inflationary environment, I'm sorry, I cannot offer you a prediction.
Yeah,
but my best guess would be
that. Let me just add to that. So, I was also quite young in 70s, but I remember a time in India where the highest rate of marginal income tax was 97%. Okay, I don't know if many of you know that. At 97%, there is no incentive to do anything, to make any more money, because you keep only 3 rupees out of the 100 rupees you make. Okay, so high inflation does crazy things to people. Secondly, India has always had relatively high inflation, 7, 8, 10%. We're all accustomed to it if you live in India. The rest of the world has not. The Western economies, for the most part, 1% inflation is a lot. And the cost of living does not go up more than point some percent or something like that. And so the Western economies are not accustomed to large single-digit inflation, if even that. Look at what happened to Netflix here. They raised the price to $14, and their subscriber base collapsed. This share price fell $125 from a $230 start. So people are, companies are getting punished for this because of, the world is not used to it. I don't know what will happen with inflation. I'm a bit more of an optimist. I think there will be some impact of inflation because of all the money supply that has been created because of the pandemic, but I think it will get under control. There is another part of it, and somebody just said this to me yesterday. He said inflation is people who don't participate in digital economy. I'm not even sure I agree with that statement, but it is a point of view, which we have to think about. Anyway, I'll stop there. So.
And we're going to be taking our last two questions, Akshay, because I want to, ensure that we keep time. But there are two. One, Ash, coming for you first, and then Akshay coming to you, Ajmer's question. But Ulas asks Ash, do you, as in Ash, invest in spot crypto or NFT or token or staking or pool?
No, so I've already shown my hand to you guys. I've got Bitcoin, I've got Ethereum, I own stock, which you can also own when it gets listed on the NASDAQ or on the NYSE later this year in the world's largest Bitcoin mining company that has a 90% EBITDA margin business. It's a brilliant business. And then my rest of my allocation will come through InvestorAi. I actually, personally, again, you can't invest in it, but I do own a couple of private vehicles that are building Web 3.0 assets, but they are private right now, so it doesn't make sense for me to talk about them. But do I own anything else? No, I don't.
Okay, thank you, Ash. Akshay, one for you, someone on our community and someone who's been around. Ajmer asks, as the product and company matures, will there be ongoing benefits for early adopters, such as preferential rates? This has been done via NFTs in some DeFi companies. Any plans to reward the early community?
Ajmer, good question. We have plans. Nothing is concrete enough for me to share with you right now. Okay? But I will tell you this, that Ash mentioned Web3. We see Web3 as a logical future for Bridgeweek. Okay, and if you're familiar with Web3, Web3 involves tokens, it involves all kinds of things, digital assets. And when we get into a tokenized future, who will be rewarded except our early, customers? So, the fact that you're an early adopter is not lost on us. Is there anything you should expect in the near term? Probably not. In InvestorAi, anyway, only charging you $1. How much more can be reduced from there? So, and there also we are giving you no win, no fee kind of thing on Alpha Hunter. So we think that is really quite low anyway. But we will remember loyalty. That's all I will say.
Great. On that note, Ash, Akshay, we've got a poll that's just gone up because I thought it was a fabulous chat. Thank you so much. Very, very useful. But let's just see what everyone has to say on this one. But thank you so much. And we will be back next week, same time, 7:30 p.m. IST or 3 p.m. BST. And we will see you all very soon. And yes, it was a great session. So thank you so much, Ash. Thank you so much, Akshay. See you all very soon. And the recordings will be up everywhere. So just follow us on our social channels. Thank you so much, everyone. Good evening.
Big thank you to Ash. Thank you so much.
Thank you so much, Ash. It was fabulous. Thank you. Bye.
Thank you.